Hello traders, to the educational video titled The Long White Body. The long white body is a Japanese candlestick reversal pattern. It's a single line Japanese candlestick reversal pattern, meaning that it consists of just one candlestick. Now, it's a reversal pattern located at the end of a decline, at the end of a downtrend, or if you prefer, at the end of a downward correction. Now, the white body is pretty straightforward to define. It opens at the low area of the candlestick and it closes at the upper area of the candlestick. But what about long white body? Well, the long body is defined as 3 times the body size of the previous candlestick. Yes, 3 times the body size of the previous candlestick. But if you don't like this definition, then you can take twice as big the average body size on your screen. You do not have to take a measuring tape, of course, and measure each and every candlestick on your screen, but you do that by visual inspection. By looking at your chart, you assess the average body size and then take twice as long that body size, and this is the definition of your long white body. Excellent. Now that we cleared that up, let's talk about the upper and lower shadow. The upper and lower shadows are small, very small, tiny, or they even do not exist at all, right? And this goes for the upper and the lower shadow. And of course, a long white body at the end of a decline has bullish implications. We expect that the next candlestick will move even higher, right? Very good. Let's go and see a simple, basic trading strategy using the long white body. Before we do that, let me demonstrate, let me show you how to identify, how to spot the long white body on a real price chart. So by looking at your price chart, we want to identify the long white body at the end of the decline. And I'm sure you guessed it right. It's located right here at the end of the decline. Let's go through the basic strategy as I promised. I'm sure you understand here that after the rally, there was a decline, and the decline, at the end of the decline, we can spot the long white body near a support area. This is very important because now we use additional technical tools, not only the long white body, because by just using a Japanese candlestick reversal pattern is not enough of an excuse to trade the markets. You need additional excuses, additional tools to agree with your decision to enter the market. And the support area in this case supports exactly that. We are going to open a trade. We are going to enter the market with a buy order right above the high price of the long white body. And of course, we are going to protect our capital by placing a protective stop loss right below the low price of the long white body. I'm sure you agree with me that it's imperative to protect our capital. Tomorrow, it's another trading day and we need capital, enough capital to trade the markets. So where are we going to book our profits? In this basic strategy, we're going to book our profits. We're going to close all of our trade at the 200% level. It's 1-to-1 risk to reward ratio, meaning that we risk 1 and we have a reward of equally 1 unit. So the distance between buy and stop loss is the same distance as the distance between the buy and the 200% level. Good. Let's add one more parameter in this basic strategy. So once again, we identify the long white body at the end of the decline near a support area, and we enter right above the candlestick and we place a protective stop loss right below the candlestick, just in case the market goes in the opposite direction. Now, we're going to close part of our trade at the 200% level, not all of our trade, but part of our trade. And then we will close the remaining of our position, of our trade, at the 300% level. Do you like this one? Very good. So do not forget to like, comment, and subscribe below. Let's add one more parameter in this strategy. Once again, we identify the long white body at the end of the decline near the support area. We place a buy order right above the high price of the candlestick and a protective stop loss right below the low price of the candlestick. Now, we're going to close part of our profit at the 200% level, another part at the 300% level, but we're going to leave a small part of our position to run even higher and take advantage of the rally of the upward momentum. But in any case, when we spot, identify any Japanese candlestick reversal pattern in the opposite direction, we're going to close the remaining of our trade. Very good, excellent. Let's move on. And let me show you a couple of other potential setups just to keep in mind. In this case, we see a beautiful downtrend. And in a downtrend, we can draw a downtrend line by connecting two or more points, in this case, high prices. And then when a long white body penetrates, violates, breaches the downtrend line, then it's a good excuse to enter the market with a buy order. Now, the take profit, of course, is strictly up to you. But again, I want to remind you, if you see any reversal pattern in the opposite direction, it's a very good excuse to close all of your position. Now, one more setup to keep in mind. After a decline, we see a rally, and of course, we can draw an uptrend line by connecting two or more low prices. And this is the case here. And of course, you can see that the long white body observed the uptrend line, it touched the uptrend line, and then it bounced up. And we can place a buy order right above the high price of the long white body. And similarly, we can place a protective stop loss right below the low price of the candlestick. Take profit strategy is strictly up to you. I gave you a few options. And of course, if you see any reversal pattern in the opposite direction, don't forget to close the remaining of your trade. See you in a while. I hope you enjoyed it. Don't forget to subscribe.